Okay, good morning, guys. Hope we're doing well. We're all running on all cylinders. All right, thanks for joining me. Welcome to Trade Setup. It's um, the morning playbook. Sorry, I'm getting a bit confused there. Morning playbook for the 24th of June. So we're just going to run through the key markets, what they were doing last night, and a few little things that I'm noticing at the moment. Maybe the market's, maybe it's running out a bit of steam. We had that sharp sell-off yesterday when Navarro came out and said the China trade deal is over. Obviously got a rap in the knuckles from Trump as he then come out and had to reiterate what he meant. Just talk it down, say it's not what I meant. Da da da. You're getting it wrong. I suspect that we're not getting it wrong. I suspect he got it wrong and he got in trouble. So whether they're mucking around the market, I mean, who knows? Why would you come out and say something like that at that certain time? Just when the Asian market was opening too, it's just nuts. Anyway, it's strange to see how much emphasis they're putting on the markets because I mean I've never known a US administration to actually sit there and watch the markets out of hours. So they're both quick to react. Obviously, Trump was quick to tweet too, and he hadn't been on Twitter for most of the morning or anything that I saw coming through, and from what I read. So he was quick to say it was all good and then reiterate that later on in the session, the US session. So it was strange. I mean, it was just absolutely spiked down. You'll see here, this is the Dow spiked down and then bounced straight back up once those comments were changed essentially, and then the market resumed its uptrend. So it just lost a bit of ground here, a bit of a flush out of some lows. Anyone that's sort of expecting further weakness to come in and then turn around and built back up again. So really good. There were some good numbers out in the in Europe, on in manufacturing, which lifted the index, lifted Europe. So that was quite strong, and that positive sentiment flowed on into the US. Now, when we take a look at the Dow, the actual session, it's gapped up on the open, and it really didn't do too much. So there seemed to be a bit of selling up at these highs, up at the gapped up highs, if that makes sense. So look, there's a bit of weakness there within the session. If you look from start to finish, it actually closed lower than where it opened, but it closed higher from where the previous closed. So, up on the day, but down on the session, if that makes sense, down intraday. So the pressure was definitely there during the session. That's the Dow. You look at the bigger S&P, much the same. Gapped up on the open from the previous close, which was down at 317. Gapped up, tried to go and then end the session, which we've seen a few times now. So just take note of that. We've seen it a few times, bit of a sell-off, some sell-offs. Obviously a big sell-off here, and that flowed through the next session, big run up, gap up, sell-off. There's whether it's selling into strength, I don't know, or whether we're just going to, the indices are just going to chop around here for a while. And then, I did it again, didn't I? And then hold a high low, and then up we go. Just want to change that while I get a chance. There we go. So whether it's just going to hold a higher low above this support zone into the Dow and then break up and through, which, the more it does that, the more it sort of looks negative, gets a bit of selling. It's more fuel to bounce higher and trade up to these highs at 32.22. So 32.32. So, stop loss trigger because of Navarro. It's nuts. It's nuts that they come out and say that, and it's nuts how they can get it wrong. How could he get it so wrong? I wouldn't say his wording was, you can interpret it that way. I'd say his wording was probably pretty clear with the way the market reacted to it. And then to come out and say, no, you've got it wrong, it doesn't make sense. So for whatever reason, I mean, why are they talking just when Asia opened? The Hang Seng was 11.15. I think the sell-off was then. Basically, it opened up. You see it jittery for a bit, and then boom, everything got slammed. So that was a bit nuts. So that's the S&P. Just go over to. I'll take a quick look at the DAX. I wasn't planning on, but we'll take a quick look at the DAX in the UK. That's looking a bit more constructive. So that looks more like, if we get a bit of a flush lower and we start to hold, we're heading higher. Because Europe is waiting for stimulus. Stimulus means inflation. Inflation means better prices. And don't forget, you've got, you've got easy access to cheap funds in Europe and US. So massive, massive stimulus, and it's keeping those borrowing costs right down, and the US intend to keep the borrowing costs right down. Now, Europe's not going anywhere with their borrowing costs. So for corporate activity, debt's easy to get, easier to finance. It's like the US has promised to backstop, and the EU's promised to backstop companies from failing. So you sort of got that sort of scenario where the more stimulus, the better. Except I don't know how that's going to play out when you've got massive debt levels. US and Europe, they're going to pay that debt down somehow. And I would assume it's going to affect that somehow. There's also news of planned job losses. So we saw Woolies in Australia do it, and I think over in the US there's companies that are going to cut back quite a lot. So I think there's quite a few companies. There was some analysis come out that quite a few companies realised how easy it was to run on fewer staff. That makes sense. Fewer management levels. Technology's helped out. They can run a lot more efficient, meaning job losses. So there's going to be, like we were discussing previously, there's going to be less. A lot of people that lost a job are not going back to anything. There's going to be job cuts. So don't expect it to get back to the norm where it was. So it'll be interesting to see how they go with earnings coming out in the US. So that's the Hang Seng. That's the DAX. FTSE's looking, constructive. Lower highs here. Higher lows in here. Support through here. Further support, higher level. It's just sort of getting through this zone. Now, if that holds, I would expect a bit of a flush out. That secondary move down and then a bounce. Okay, but that's either way. That's looking constructive as well. Look at the ASX. That's a bit choppier, but I'm expecting this to hold and rally. Today on the SPY, I expect a bit of a flush lower. If we can just get that up, bit of a flush through the support, 59.27, and then a potential bounce. I mean, a lot of people would be viewing this, a lot of bears would be viewing this as bearish, obviously. But I wouldn't be surprised if we get a flush and then we start to bounce again. And a lot of the times we're heading down in our session and back up in the US, down in our session, back up in the US. It seems to be like they're playing the game a bit, but we'll have to see how it goes. So that support I would expect to hold, longer term support at 58.85 in the ASX. Expect some sort of chop in between the support and resistance zone. But ultimately, if the US just keeps going up, we're going to have to go with it. Okay. If we go on to the dollar index, now the dollar index, this is sort of one thing that just caught my eye. The dollar's down on support. Okay, you can see this major support down here. Now this is the US dollar index. Major support pushed through, took out some stops and reacted back up. All right. We have seen some selling. That's on the back of the positivity in the US and the positivity everywhere in the equity markets. Everyone's expecting a quicker recovery than what they originally thought. The market is overbought up here, meaning it's had a good bounce. The momentum's easing. It's coming to the spot where it'd be interesting to see if it does go down and retest and holds a higher level, or whether it just plows straight through and it's unconcerned with that support level. Okay, so there'll be two things I'll be looking for, just to see what happens if we start to find an inside level, and this coincides to a lot of other markets being, the way this is crude, the way that reacted lower. After breaking up and through, holding above the previous session, flush lower, retest. That was a flush on that Navarro use, so you can sort of discount that in a way. So that come back to test that zone around 40, just above 40, that resistance zone, and then plowed through. But as soon as we opened the US session, bang, straight back down. So that was quite a decent pullback in my book, and we're coming back down to hold this, potentially looking to hold this inside level. Now it'll be interesting to see whether we do. If that US dollar continues to head south, it should be bullish for crude. Okay, but if it looks like, from this, it looks like there's potential that we're going to hold up on this zone and hold the inside level on US dollar, that should be bearish on crude and bearish on, your golds and things like that. Now, gold is also up at that resistance zone. I don't know why it's not coming up with my resistance zones. Anyway, it's over here. Gold has just pushed through that 1765. The momentum has been up, and momentum seems to be slowing on the upside. We're in overbought territory. It doesn't mean that we can't get up there, but it's just looking like that was a sort of an expected target to get through that zone at 1765. And it's only a few bucks through, so there's no reason why this can't just flush lower and we potentially just have a bit of a pullback. I'm trying to find something that where we did that action. But anyway, there's a lot of longs built up. And this leg is actually quite extended. You've extended up to this high. If we just clone that and we move that from low to high, it's right there. So that leg up, that contraction, that consolidation, and then the expansion back up again. So these legs are quite equal and opposite. Equal in expansion, then there's a chance this could run out of steam. I mean, you couple that with where the US dollar is, that would mean the US dollar is going to bounce, you would expect. So it looks like gold was intent on getting up there, getting through. That would have trapped, if that's the case, we're going to start to sell off, then it's going to trap a lot of bulls, a lot of bulls above, in this zone here, a lot of bulls are bought on the break there or added to positions on the break there. So there's a lot of fuel that could potentially roll over and pull back. But I think, by looking at this, it's going to be quite savage. You would expect it to come straight back down to 17.45 or so, or lose $20 or $30 in a night, if that's what's going to happen. Otherwise, if you pull back, you're just below 17.65 and you start to look like it's consolidating again and starting to hold, then we're probably going to get up and through that high at 17.70 thereabouts. But again, that's just, you look at that with respect to the dollar. So we're just remembering where the dollar is. If we go over to, we looked at crude, we go over to another market that's in line. What am I looking for? Copper. The way copper reacted down to, considering the markets were up, it's not, and that was right through the US session. So in Europe, the market just plowed higher. This was a sell-off, so everything sort of reacted lower. It shows, this sort of movement shows that the market's still jittery, but they've got the finger on the buy button. As soon as something comes out, bang, they're straight back onto it. Market come back up, bounce back quite hard. Bit of a flush lower, that would have dragged in a few more bears, and then bang, up we go, holding higher levels, pushed up to the highs. The highs are around towards the, just before an hour, 2 hours before the US session opened, and then we started to see a sell-off. Okay, whether that coincides with the US dollar, just go and see. This is a half an hour chart. Yep, half an hour. That US dollar was heading down, so it's like, even though the weakness was coming to the US dollar, which would have really been a bit supportive of copper, copper started to turn as well. It was sort of anticipating a push into this low. Right, so it'd be interesting to see if this can hold up. It's got to hold up at 2.6465. It could easily do that, but if it starts to find some sellers and starts to break through that, again, I think that's going to play into a stronger US dollar. So there's quite a few markets. The way they reacted off the highs, you got copper, crude. The way it reacted off the highs was quite savage during the US session. So the US, they just looked like they weren't ready to hold it up at these levels. This trend is still up. So crude is still up, copper is still up. The trend really hasn't changed. It's just the way it was reacting up there. Gold is at a level where, it's extended into here. It doesn't mean it can't keep going, but it is extended. When it's extended, you tend to think there's going to be some sort of pullback. Okay, I'm assuming I'm still coming through. Looks like we had a little pause in the stream there, which is not unusual. Yes, I hope you got all that. But it's these connected markets. US dollar still looks like it's going to go down, just when it's reopening here, but it could be a bit of a flush. So I'm just wary that we're going to get a flush and start to build back up again. And if that's what's going to happen, just watch for that break. Go down here, we might be constructive here, and then bang, up we go. So I'm just keeping an eye on those, and just to see what plays out. But that's it for today, really. That's all I wanted to cover. It's all linked into the US dollar, but the US dollar is down in support. So we're going to be wary that you look at other currencies too. You look at the Aussie, still bullish, but a big sell-off here. I wouldn't have expected that kind of a sell-off after really pushing up. I expected maybe consolidate the highs. If you get a big leg up and you can consolidate those highs, it's a good show of strength. The further it pulls back, it shows that maybe the buyers aren't willing, even though it's going up, they're not willing to hold for too long. A bit of nervousness is coming around. The euro, a bit the same, got up to a resistance zone and backed off quite sharp. So we'll just keep an eye on those anyway. Anyway, guys, thanks very much for joining me. We'll be back in again tomorrow at the same time, 9:40 Sydney time. Any questions, feel free to send an email to support@tradesetup.com.au. Have a great day and happy trading.